Jonathan Miller of Miller Samuel joins us now for more. Jonathan, Lisa and I were both looking forward to this conversation. Before we get into the policy from the Harris campaign, I want to start with the policy coming out potentially from the Federal Reserve. A key question we've all got, and we'd love your opinion, whether the effect would be greater on unlocking supply or stimulating demand. How are you thinking about a reduction in interest rates?
I'm thinking about it as a wash, that the idea that we're going to have more inventory come in with lower rates is going to be offset by the increase in demand. I don't think the picture changes that much from where we're sitting right now. And it's interesting because so much of the economic commentary surrounding housing is amazingly out of date just because of the yen carry trade situation in early August. It seems like years ago, but it's very sudden. And so all the data like pending home sales is showing a sort of a prior moment in economic history, I think.
Jonathan, can you tell me then your view on rents? Because I know rents, particularly in New York, things are really quite punchy. When it comes to unlocking maybe demand for purchasing, do you think we can unlock some supply for rents? Because the people that have been trapped in renting properties, particularly here in New York, and I'm getting personal now, do you think some of those properties will ultimately be left and available for people?
I do think that as rates come down, that the pressure will soften. And the way to think about the rental market and the purchase market as competitors, and we've seen rents really pushed higher because over the last 2.5 years, mortgage rates have really jumped, and that has tipped the balance, pushed people in. I don't see this as a correction in rents. I see this as a slowdown in growth or stability in rents, maybe some decline, but certainly the tenants aren't going to be sort of realizing a tremendous influx of new affordability. I think this is a long grind.
Yesterday, U.S. pending home sales dropped the lowest on record, or the gauge that tracks them. How broken is this market right now, Jonathan?
Well, it's extremely challenged, and I think the pending home sale data that came out doesn't reflect sort of buyer minds, buyer attitudes that were changed in the early part of August with a sort of a reflection on what recession risk is and what the Fed is going to do. I mean, after all, we're seeing in New York, for example, an uptick in contract activity disproportionate to the season. And you have to remember that consumers have been waiting for 2.5 years to make a decision. And it appears that what we're going to see, not just in New York, but nationwide, is as rents soften more because of lower mortgage rates, as more people go into the purchase market from the rental market, that we're also probably going to see rising housing prices as a result.
This is what we've been asking, exactly that, Jonathan, this question of will lower rates cause prices to go up or affordability to go up as well, right? This sort of two ideas. Will it get cheaper for people to buy homes, or will it become all in more expensive because even if rates are lower, the overall asking price and achieving price is going to be much higher? You sort of alluded to it. You think the price is going to be significantly higher.
I don't know about significantly, but I think the trend is we're going to see price growth continue. We are seeing more inventory come in. Some parts of the country are seeing more than others, but it is in a good part of the country, inventory levels are still well below pre-pandemic. And in those markets, you're going to see more price growth than you will in markets where inventory is at parity now.
There's this real question here about the pace of declines in benchmark rates and who it unleashes first, the supply or the demand. We've been talking about this. How low do benchmark rates have to go to unleash the supply? People who want to leave their homes, whether it's people who are retired, no kids, big houses, they want to downsize, or whether it's people who had kids and have no space and want to move, but have been locked in by their mortgages, whichever one you happen to be in. From your perspective, what is that rate? And does that unleash supply before it unleashes demand, or vice versa?
Right, it's sort of like a dance we're trying to orchestrate here. The way I think of it is, I think of it as it's incremental change, but once we, the rates, like on a 30-year fixed, drops below 6%, if that's the case, I think visually that will have sort of a jumpstart effect to demand. I don't think the thing that I'm sort of conveying here, I'm trying to convey, is that I do see it as an offset for all the new inventory that comes in. I think we're going to see an increase in demand because both buyers and sellers are aware or looking at the rates. A seller that has been reluctant to list is going to become a buyer, and the lock-in effect that was holding them back. They've had 2.5 years to sort of think about it, and at some point, personal situations require action.